Hello and welcome along to Edie's Susty Talk, our series of video interviews designed to keep you all feeling connected to the sustainability, CSR and energy conversation during lockdowns 1, 2 and 3 and beyond. And we are putting together a series of interviews this month with people that are going to be speaking at our Sustainability Leaders Forum, which for the first time is digital and will be happening on February 2nd, 3rd and 4th. And the speaker that we have on today, I'm delighted to have, is Mark Lewis from BNP Paribas, who is their Chief Sustainability Strategist. So Mark, thank you so much for your time this morning.
My pleasure, Sarah.
And how are you, and what's it been like in recent months doing your job? I know we spoke a little while ago, and I can see that you're at home at the moment.
Yes. Well, it's very surreal, isn't it? I think we're all learning to cope with a new normal. But here in France, I'm based in Paris, and we have been, we had the first lockdown, which was all working from home. We went back into the office over the summer, albeit on a staggered working arrangement, so that there was never more than 50% of the staff in the same building at the same time. And since late October, again, we've been on working from home rotas. It's not too bad. Luckily, we're very fortunate, those of us who are able to work from home, white collar workers. I'm literally a white collar worker today. I think it's a privilege to be able to do this from home, and important always to remember people who are less fortunate and are running inevitably bigger risks by exposure, particularly health workers, of course.
Mm-hmm. For sure. And Mark, I believe that when we last spoke, you had a slightly different job title, and so with that in mind, and for people at home, would you let us know what does the Chief Sustainability Strategist for your company do? So how does your role play into sort of strategizing and delivery, and how has that role changed for you in 2020?
Sure. So I joined as the head of sustainability research at BNP Paribas Asset Management, and was managing the team of analysts that in the sustainability center that do all of our ESG analysis on all the companies and are responsible for the ESG scoring of the companies in our different portfolios. And I suppose for the first 18 months of my time at BNP Paribas Asset Management, I've been there 2 years now, I was really focused on this big project that we had, which was revamping the ESG scoring methodology, because we're mainstreaming the scoring of ESG into all of our portfolios, not just the dedicated SRI portfolios, but all our portfolios. And that was a big job, and it involved the Sustainability Center and our colleagues in the quantitative research group, and many inputs and interactions with the investment teams themselves. So this has been very much a collaborative effort. And then on completion of that project, I have taken on this new title, as you said, Sarah, of Chief Sustainability Strategist. That's a twofold role, in the sense that on the one hand, I'm still very much in research mode, researching and publishing research on topics of interest in the sustainability field, particularly in my own area of expertise, which is climate change and energy markets. Keeping the profile of BNP Paribas Asset Management as high as possible on these topics. I published in October a very in-depth look at green hydrogen and carbon pricing and the future of those two things in the European Union. Constantly being out there in the marketplace with these ideas, that's a very important dimension to the job. And then the second dimension is really interacting with the investment teams internally as much as possible, funneling in ideas from the Sustainability Center and from the analysts. And if you will, I'm a kind of go-between between the Sustainability Center and the investment teams in terms of idea transmission from the Sustainability Center to the investment teams. And it's a two-way process. I also transmit back from the investment teams to the Sustainability Center, excuse me. So that's the logic of the role. I mean, think just to put it into clearer perspective for your audience, really, the idea was behind this creation of a new role, because it is a new role. The idea behind it was, the idea was that sustainability really is going mainstream. And if it's going mainstream, you have to package it in the language of mainstream market participants. I think, what we've had over the last 15 years is the emergence of sustainability as a vital field within the investment community. But until relatively recently, it's still been it's a relatively niche product. And I think now it's incontestable that we're in a new environment where sustainability is front and center and genuinely is mainstream, and this role is designed to cater to that. My own background is primarily as a mainstream financial analyst covering energy markets, so bringing that kind of mainstream financial background to the study of sustainability and repackaging it into a mainstream practitioner's language, and that gets easier every day, because the great thing is the economics of particularly in the field of climate change, the economics of renewable energy are becoming more and more competitive every day. This is why you've seen over the last year and a half in particular, a much tougher time for the oil and gas sector, for example,
Right.
because investors are looking at the oil and gas sector now, not only through the lens of, is it ethical to invest in companies that are pushing CO2 into the atmosphere, but also, do these companies have a viable long-term future? Is the demand for oil going to remain high when we have a whole new type of energy coming through that is cleaner, and now increasingly cheaper also?
Mm-hmm. I wanted to discuss that a bit more, actually, this idea of sustainability just becoming the new normal rather than a specific add-on. So the last time we spoke, the team had put out a big piece of research about, as you say, the scale and the speed of these shifts in low carbon markets. So things like renewable energy, oil, electric vehicles. And the view was that while some businesses and some governments had got a hold on that and understood that, others were still like, no, sustainability isn't the new normal, it's just a minor part.
Right.
You talked about some of the trends of 2020. So do you think that there's been a shift in mindset here, or is there still a disconnect?
I do, absolutely. And I mean, I think clearly the terrible pandemic that the world has been living through over the last 12 months has had quite a bit to do with that. I mean, I think if you think about the impact of the pandemic, again, I'll focus more on my own area of expertise. If you think about the impact of the pandemic on energy markets, it's been an absolutely extraordinary year, 2020, because the pandemic has depressed demand for energy globally. And as a result, 2020 is the first year in history where renewable energy will account for 100% of the increase in global energy demand. In fact, more than 100%, because all other sources of energy have seen a decline in their demand over the course of 2020, particularly the fossil fuel sector. Oil, for example, demand for oil last year probably fell by about 9 million barrels a day. That is more than 3 times higher than the previous highest year-on-year decline in the global oil market since the Second World War. So unprecedented demand destruction for oil and other fossil fuels in 2020, but solar and wind still managed to increase their consumption. So the demand for solar and wind, even in a pandemic, has increased. What this does, I think, is to change the frame of reference for investors, because in a sense, the analogy I use is that 2020 is really a trailer for the full feature film that we'll be showing across the world over the next 2 decades, as renewable energy continues to take more and more of the, first of all, the increase in global energy demand. And then within 5 years, I think what we saw last year will be a common structural thing. Renewable energy will be taking 100% of global energy demand every year. Going forward, structurally, there comes a point where that will happen. Once that's happened, fossil fuels have peaked for good, and the industry goes into terminal decline. And financial markets, the whole point about financial markets is that they anticipate these changes. And again, to use an analogy, markets are getting better markets are becoming more literate in reading the text of the energy transition, if I can put it that way. You know, if solar and wind are taking more and more of the increase in global demand in global energy markets, then there comes a point where they're going to take 100%. And as I say, last year they did that for the first time ever. Strange year. It's not yet structurally the case that they will be taking 100% every year, but I think within 5 years now that will happen. So basically the impact of COVID has been to accelerate the market's understanding of the energy transition, and I think there's no going back now psychologically, and you see that reflected in market valuations.
And I wanted to come on to disclosures as well, because there seem to be a lot of changes in that space in 2020, and obviously disclosure is part of, as you say, that literacy, that understanding of where things are going. Absolutely. So we saw news about new TCFD requirements in the UK for pension funds and for listed companies. And I know this is something you're going to touch on at your speech at the forum. So would you mind giving us some insight on where you're at with that, and what you're seeing across the financial sector more broadly?
Yes. Well, I've been a member of the TCFD now since April 2016, so 4.5 years, getting on for 5 years. And I think 2020 can really be, again, put down as, or explained in terms of, the realization of Mark Carney's original vision for the TCFD. And what I mean by that is that if you go back to the speech that effectively launched the TCFD, which was Mark Carney's The Tragedy of the Horizon, or Breaking the Tragedy of the Horizon speech at Lloyd's of London in September 2015, what Mark Carney said in that speech is the rationale for having a TCFD, or for requiring greater disclosure around the financial risks posed by climate change to industrial companies and to financial companies, is that when you give more information to the market is better able to allocate capital. And it's better able to allocate capital because as it gets more information, it starts asking more interesting questions. And so you get this virtuous feedback loop between the disclosure of information and the understanding on the part of the market, and then the reflexivity whereby the market then asks more probing questions, and the whole thing starts to snowball. And so my favorite line in that speech of Mark Carney's is where he talks about what the TCFD can do to help develop a market in the transition to a 2-degree world. In fact, I think that's an absolutely brilliant formulation, and that's how I would summarize what the TCFD is designed to achieve. Of course, what's really interesting, and again, is proof of the success of Mark Carney's original vision, is that a 2-degree world now sounds very quaint, because everybody is talking about 1.5 degrees and net zero. This is exactly what Mark Carney was talking about, I think. You know, it was designed to generate a virtuous feedback loop, and I think TCFD now is not quite yet fully mainstream, but I mean it's really burrowed its way into the financial market conversation. And I think any company now that wants to be seen as having understood the challenge posed by climate change and the need for a more sustainable form of capitalism is undoubtedly having to adopt the TCFD guidelines and start reporting along those lines. So you mentioned, Sarah, the UK. Obviously, France has had TCFD-like requirements since the Article 173 of 2016. Japan is a very, very strong supporter of the TCFD. In fact, Japan has more industrial and financial companies, I think, signed up to TCFD reporting than any other jurisdiction in the world. So I think we're seeing this mainstreaming all the time. And it's made possible by the fact that the economics, as I said at the beginning, I mean, I always come back to the economics on this, because sustainability really only goes mainstream when the economics dictate that that is the case. Now, there are lots of things you can do to accelerate that process, and more reporting, better understanding is a crucial part of that. That again was Mark Carney's vision. Carbon pricing is very much another one. You have to put a price on the externalities, and so all of these things are now coming together. Look at the European carbon market. We've had yet another all-time high this morning. We've broken through 35 euros a tonne for the first time ever. That's how much it's going to cost you now to emit CO2 in Europe. It needs to go a lot higher if we're going to get onto a net zero trajectory. But all of these things are happening. It's very exciting, and I think it will accelerate further, because this is the whole point about the logic of a virtuous feedback loop. When you have a feedback loop, it accelerates over time.
I remember writing about carbon pricing in Europe being something like 21 euro, and that was only in 2018. So you can see that speeding up.
Some of us can remember when it traded at just over 2 euros a tonne at the trough in 2012. And, we had that very long period, the wilderness years of the carbon market between 2000 and I would say 2011 and 2017, early 2017. And then the European Commission came up with this idea of a market stability reserve, in effect a central bank, quasi-central bank for the carbon market. And that, combined with the very forward-looking, ambitious target for Europe to get to net zero by 2050 and to raise its target for emissions reductions by 2030 to 55% from 40% compared with 1990. That's what's driving this higher carbon price. And of course, very exciting now to have the incoming administration in the United States under President-elect Joe Biden. I think this is going to give added impetus to all of these initiatives, to greater disclosure and transparency around climate risks, to renewable energy, where the incoming administration will be much more supportive than the outgoing administration. And all of this, again, will help accelerate. This is the whole point about a virtuous feedback loop. You reach a tipping point where it's unstoppable. And I think we probably reached that well before 2020, but 2020 has seen a very dynamic acceleration of that process.
Mm-hmm. Well, Mark, this is all completely fascinating, and we've covered so much ground, but I know that I have to let you get on with the rest of your day. So if you enjoyed what Mark had to say, he will be discussing how and why investment portfolios are changing in line with these markets, as well as providing some best practice advice for implementing TCFD recommendations, along with a panel of experts on day one of our Sustainability Leaders Forum. So that is February 2nd. For a full agenda, you can visit event.edie.net, but just looking at his panel, it looks fantastic. He'll be joined by experts from WHEB Asset Management, Lloyds Banking Group, Futerra, the London Stock Exchange, and Aviva Investors as well. So we hope to see you there. But in the meantime, Mark, it was a pleasure chatting for you, and thank you so much for your time.
Sarah. Yeah, thank you very much, and look forward to seeing you on the 2nd of February.